Coming in high. What's going on, boys and girls? Welcome back to the channel. Ro Knows Money. My name is Ro, and I'm here to update my retirement savings challenge week 29. Actually, week 28 and 29. I missed last week. Uh, had to skip another week because we had family come over from out of state, and we were tired. We were just busy. We did the Disneyland thing, the beach thing, eating out. We threw a party for my son's graduation from college. We also celebrated my mother-in-law's, I believe, 88th birthday, and she was one of the people coming out of town, and it was a blast. A week of just uh, getting to hang out with family, and again, what good is money if you don't use it to have a great time, and that's what we did. So again, we're back after skipping one week. This is week 29, and for those of you that don't know what's going on, this is the deal. The challenge is beginning 2026. I pledged $50 a week into a Roth IRA. I'm going to document all transactions and the performance of this portfolio for the next 5 years, which is will be the end of 2031. I'm sorry, 2030, and then we'll reset the challenge uh, beginning 2031, just to see what we need to do. Am I going to be closer to retirement? I am in my 50s, and probably, hopefully, God willing, within the next 8 to 10 years, I'll be uh, laying down the gloves at work. And but anyways, after 5 years, hopefully with a annual return of 10%, which is typically what the S&P 500 does, the stock market will be close to 17,000. And you can put money into a B of A savings account, which will get you 0.01%. Chase will give you 0.02. Your Westcom, which is a what do you call that? A credit union, local credit union, is going to get you 0.5%, and then you go into more of an online savings account, so it'll get you a little bit more, which is what I do. I also do that. I have a B of A account, and I have an Ally account, which gives me 3%. SoFi, I think that's the best one I saw. I might have missed one or two, but you can get up to 3.8% just putting your money in a online savings account, or you can go get some U.S. Treasury bonds. They'll get you between 4 to 5%. But if you are wanting to dip into investing, this is an investment calculator. I put in 5 years, the 10% return rate, compounding monthly, $50 per week roughly is about $216 per month. And if everything goes well, we'll be almost at 17,000. Again, this is just an arbitrary amount. You can save more if you can, or even if you can't save as much as $50 a month, just showing how it works will give you more than just, you know, not even looking at your finances. And that's what the problem is. A lot of people just don't even look, and years and years pass by. They never put any money into retirement, and voila, you're in your 50s and you have nothing. And that is scary. That's why I'm doing this, so that hopefully it'll inspire you guys out there to start looking into retirement saving, because you can't rely on Social Security. Um, and hopefully you have a good job that has a 401k with that matches and um, all that jazz. You know, if you're one of the lucky ones that has a pension, that's even better. But a lot of people don't. So it's really up to you to start looking out for yourself. So moving into what we did for week 28, which is the week of July 13th, 2026. On on Tuesday, 7/14, we deposited uh, $50, which made it 28 straight weeks into the Schwab Roth IRA. And the next day, on Wednesday, 7/15, we received 53 cents dividends from Maine, which dripped right back into the stock. Bought a $10 fractional share of SCHG at a share price of $34.77. Bought another $10 fractional share of SCHD at a fractional share of, I'm sorry, with a price of $32.46, and then bought another $10 fractional share of SPMO at a share price of $149.12. And on Thursday, 7/16, bought another $10 fractional share of SPMO at 146.58. And later that day, I bought $12, a $12 fractional share of the same SPMO, this time at a lower price of 145.64. Um, yeah, been buying a lot of these fractional shares because I want to spread my portfolio out. I don't want to just concentrate on one thing. I know that I had Meta and Microsoft early on as huge holdings, and I'm trying to, as you can see, get into a lot more ETFs. That way, I can spread my risk. So moving along, week 29, which is the week of July 20th. On Tuesday, July 21st, I deposited $50 into the Schwab Roth IRA, making it 29 weeks straight. You got on Thursday, July 23rd, it was a busy day. Again, as you can see, I bought a bunch of fractional shares, and we'll just go right down the list. $10 of SCHG at $33.61. $10 of JEPQ at $58.89. $10 of QQQI at $53.71. Another $10 of SCHD at $32.94. $5. And again, it's getting silly at this point, but I don't I don't want to invest as much on individual stocks as I do the ETFs. So, even though I'm not doing it as much, Meta and Microsoft has been dipping lately, so I put a little into Meta at a share price of 608.42, and then Microsoft $5 fractional share at 387.44. On Friday, July 24th, we received $1.09 dividend from QQQI, which we dripped right back into it. So that is what's happened the last couple weeks, and this is the performance as of Friday, end of day Friday, which is this is a list of my individual stocks. We've got Amazon at a total of 14%, 14.76%. ARCC at a positive 0.62%. Got Maine at 5.06%. Meta, as I said before, it's been dipping. It's been green the past month, and now it's back to negative 0.306%. Microsoft are also in the red at negative 1.69. Nvidia is at 15.77%. You've got Visa, which is my best performing individual stock at $17, 17.72%. And last but not least is Vici at hanging in there at 0.13% on the positive. Moving along to my ETFs. This one, uh, my high dividend ETFs are gotten hit hard, and JEPQ is at negative 3.37%. QQQI is at negative 5.40%. SCHD hanging in there at 5.56%, as well as SCHG at 5.74%. And last but not least is my momentum ETF, SPMO, uh, at negative 4.12%. Its momentum is going backwards, so that's not good. And also, we have a little bit of cash left at $2.76. We'll carry it over for next week, and hopefully we can keep it up. As you can see, $50 times 29 weeks straight. We have a total of $1,450 invested, with a portfolio balance at the end of week 29 at $1,510.89, with a total unrealized gain of $60.89, or in percentage terms, 4.199%. Again, you saw that list earlier. Um, in the bank, you're going to get not even a percent. Online, you'll get roughly 3%. Um, the only one that's matched this one is if you put it in a treasury bond, but that has its limitations because you have to keep it in for a certain amount. Well, this one is liquid. I can sell it. I can sell this whole thing on Monday and make out with $60.89. So, but we're not doing that. We're in it for the long haul. Again, 29 straight weeks of $50. Let's hopefully we can make it 30 straight weeks next week. And I've been focusing on a lot of ETFs, but this latest pullback in the market is creating a few opportunities, and I wanted to highlight five of them. And Microsoft is one of my favorites. It's if you can remember, it's at negative, I believe, almost 2% in my portfolio, but it's one of the best run companies in history, and with a great balance sheet, and their commitment to putting in some capex. I can't think of a better word, but basically spending some money into AI hopefully will help them keep up with all the technology going into the future. And I'm bearish in Microsoft, and hopefully I'm right. But it's still down, so yeah, I think it's a great opportunity. Don't again, I'm not telling you what to buy. I'm just telling you what I'm gonna do, or gonna keep doing, because I've been doing that for from the time that we started this whole thing. As well as Meta. Meta is another one of my favorites. It's been dipping as well. Um, Again, great balance sheet. They're coming up with some new things. I don't know if you've gotten a chance to take a look at their new glasses, which is controversial. You don't know if somebody is, videotaping or audio taping you. It's crazy. And, who knows what's going to be next. But, somebody just wearing glasses, you don't know if they're wearing Meta glasses or not, and if they are, you don't know if they're rolling video, and it's kind of a whole new world out there. Just don't know. Next is Netflix. Netflix, it's probably close to its 52-week low. Uh, I believe it's at $70 right now. It dipped below that. It got to about 68, and I just was just DCAing. It could go lower. I think people are waiting until it gets to 60, but I'm not really trying to time the bottom. I'm just looking for good deals because I'm in this for at least the next 5 years, and I think that Netflix is a staple. In a recessionary economy, it might be one of the best deals. People will, still need entertainment. So, you know, what's better than staying home and not going out and spending money and just Netflix and chill, right? That's the whole thing. So, I think that Netflix, even though it's got a lot of other competition, but um, it's still to me the biggest, and it still has a lot of room to improve. They're dipping into their ads, s- tiers of memberships, and I think that in that part of it they'll gain some more revenue. But again, I'm not I I don't do too much of a deep dive on the income statements or profits and loss statements for of these companies. I do some YouTube financial deep dives in that way, but and I'm actually kind of excited to do a little bit of video in the future of some of the YouTubers that I listen to, and you might be doing the same thing, and I'd like to hear your thoughts on these guys, but um, a lot of these YouTubers are the ones that are helping me not so much pick stocks. Well, a lot, some of them are, but they're helping me um, stay interested. It's kind of a community. So again, whatever is gonna help you or help me or help you keep this up, do it. If it's entertaining to you, do it. That way, you know, you get hooked and you want to keep going. So, s- speaking of keeping going, let's move on to the next one, which is Tesla. Tesla has gotten, it was over 400 not too long ago. Now it's threatening to dip below 300. So I jumped back into it around I want to say 320, 310, 320, somewhere along there. I think it's sitting around there right now. And if it keeps going down, I'll keep buying. And this might be not a long term. This might be a swing trade for me, um, if I were to go into it. But it's something to look at. And last but not least is SpaceX. Is it time to jump into this thing? It is, I believe, at 115, which is $20 off of its IPO. It went over 200, so we're looking at, well, I can't do the percentages, but it's a lot. I believe it's over 100 points below its high. So, is it time? I don't know, but if you have a long enough window to invest, something to look at. And like I said, I'm not here to tell you guys what to invest. I'm just here to tell you to invest, not necessarily to invest in what. My whole point is to show you my journey. Hopefully, it inspires you to do the same thing. And if you like to, feel free to comment and let me know what I'm doing, how I'm doing. If you agree, if you don't agree, um, you know, let me know. And maybe you can I can learn from you as much as you learn from me, and we'll all be better for it. So if you like what you see, just click the like button. If you want to see more, subscribe. And again, we'll be doing this for the next 5 years. So hopefully you join us next week for 30 weeks straight. And have fun and stay safe out there. We'll see you. Bye.